bunch of time for questions as well. So first off, Ethereum, Bitcoin, the whole crypto market just seems like it's tanked the past couple of days. Lots of people are freaking out, saying, "Is this the beginning of the end?" What's your take on all this price movement going on?
It's nothing. In crypto land, this kind of price movement, 5-8% on a given day, that's nothing. That's like the cloud passing over New York. It happens all the time. Like if you're worried about if this shakes you out, you should not be in crypto, because this will happen every couple of weeks or days sometimes. And when it really tanks, like we're talking 30-40% down in a single day. So if that doesn't sound like your cup of tea, stay in the S&P 500.
Yeah, that's a that's a great line there. Like if yeah, it seems like, there are volatile stocks, but then it's nothing compared to the volatility of, of crypto world. And I guess there is a sense where you got to get used to it, get used to that.
Netflix reported earnings a couple of days ago, and I think it was down like 8% after hours. And the headline was like Netflix crashes or tanks after poor subscriber additions in the guidance. And I'm like, oh my God, it must be down like 20%. So I can check it. It's down 8%. I'm like, oh, so it's just like typical intraday move in crypto. This is like no news. Move on.
I'm curious, in terms of your personal holdings, like what percent of your investments are in crypto assets versus, let's say, stocks or real estate or other forms of assets?
Sure. In the liquid component, and I tweeted this out a couple of months ago, it's 70% crypto, about 30% equities. There's some cash, but it's so small. It's like I can't see it on the pie chart. So I am majority crypto right now.
Got it. And then what kind of keeps you, long, let's say 70%, over? I mean, is it your long-term conviction that this field is just in the early innings and early stages?
Yeah, I mean, any asset allocation is kind of like you're weighing the options available to you right now, right? So in terms of liquid allocation buckets available to you, you have fixed income, which I think is not interesting to most of the listeners on this show. You have equities, which I hold, a reasonable amount because I've been investing in equities for the last 10 years or so. But when allocating new capital, you kind of look at, and there's of course crypto. When you're allocating new crypto, allocating new cash, you're trying to ask yourself which of these have the best risk and return profiles. And when I looked at a couple of months ago, it was at fixed income, I'm not going to touch. Equities is just like extremely expensive. Even if you believe in all the great narratives about tech, it is still very expensive. Part of the reason why software and tech has done so well over the last 5 years is because 5 years ago, if you're investing in that stuff, the valuations were expensive for the time, but not crazy expensive. Like if you bought, say, Salesforce, one of the great, like very stable growers in the last 10 years, you were paying 5 to 7 times revenues. Today, the multiples are higher, and across software like SaaS companies, the multiples like 20, 30x very easily. So when you are expensive to begin with, like for it to go up, it's just a lot more difficult. It's not saying it's not possible. Could you invest in tech names and still double your money in 5 years? Yes. Could you 5x your money? That's much harder. But the last 5 years, of course, with the benefit of hindsight, you did and you could. So you have to kind of look at where you are in terms of base rates and how much people are paying for it now. And then you look at crypto. Like one very simple kind of reason why I'm just comfortable with it is that let's just look at two very well-known names, Salesforce and Ethereum, right? Salesforce is roughly speaking a $200 billion company. Ethereum is a $200 billion protocol or cryptocurrency, if you will. Would you rather own Salesforce or Ethereum for the next 10 years? I would rather own Ethereum. That's just my personal take, right? Because it's like Salesforce is tens of thousands of people badgering you to subscribe to stuff and use software that Mark Benioff is literally kind of shoving down your throat at times. Great company, great product, and obviously added a lot of value to the world. But it's kind of a done story. Whereas you have Ethereum, which if you look at it, the addressable market is literally the entire financial system. And it is literally practically day one of Ethereum. Ethereum is not, Salesforce is a software product or a constellation of software products, whereas Ethereum is a platform more akin to the internet, and stuff is built on top of it. Very few things are built on top of Salesforce. Yes, there are some app integrations and things like that, but generally you don't have an economy that is diverse and interesting on top of Salesforce. In Ethereum, there are entire companies, applications, economies being built on top. There are many analogies you can use, but one simple one is kind of like Windows. Back in the day, you want to invest in Microsoft because so many applications are built on top of it. Ethereum is getting to the point now where it's not just this cryptocurrency that you speculate on, but dozens upon dozens of useful applications are built on top of it and use it. And that's a very enviable position to be. Every tech company wants to be a platform, and Ethereum is already a platform.
Mm-hmm.